Today I'm going to be reviewing the XBB iShares Core Canadian Universe Bond Index ETF. There are a few reasons that I like this ETF and want to share this with you. Before we go into it, I want to clarify that bonds are not usually that interesting, but do play a key role when constructing a diverse portfolio. Year to date, this ETF is down 10% and trades at just above $28 per share. Bonds may move more to the downside, but since they are down this much this year, I do believe it is an opportunity for investors to at least look at. A few key points why an investor may purchase XBB is they offer a low-cost broad exposure to the Canadian investment grade bonds that pays monthly distributions and is designed to be a long-term core holding. When we look at the performance of this ETF, we see it is trending down over the last few months, but when we scope out to an all-time perspective, we see that it is on a pretty decent trajectory, and this recent movement downward is fairly abnormal from a historical perspective. This ETF is designed to be fairly stable and not as volatile as most common and preferred stocks. That's why we see this consistent trajectory and minimal losses during the down periods. That's why I think there is an opportunity in purchasing shares of XBB at these levels. If we look at average annualized returns, we see that XBB yields about 4.5% per year, which is quite a bit lower than most common stock indices like the S&P 500 and TSX. Cumulative returns are about 160% since inception, and I would expect returns like this looking into the future as well. One of the key points from earlier is that XBB distributes monthly, and it is about 6.6 cents per share. Earlier in the 2000s, XBB was a quarterly distributor and recently has changed to the monthly distributions. I see this as a benefit since this ETF is so stable that it will produce monthly cash that then can be reinvested into the market elsewhere. It can be hard for an investor to build up a diversified bond portfolio since it takes up so much cash, but this ETF holds 1,400 holdings and can be very valuable to the small investor. We can see the weighted average maturity is 10.5 years, and I think that's a decent place to be in the bond market. XBB has a 2.8% distribution yield, which corresponds to a 6.6 cent per share monthly, as we saw earlier. To make XBB a core holding, I think it's very important to take into account management fees. And XBB has a very low management fee of about 0.1%, which corresponds to $10 for every $10,000 invested for 1 year. The passivity of holding bonds makes this holding a very low risk, shown by the iShares risk indicator here. Since XBB is a Canadian bond ETF, you'd expect them to hold Canadian bonds given out by the Canadian governments, which is exactly what they hold, as well as provincial bonds and corporate bonds from TD Bank, Royal Bank of Canada, and Bank of Nova Scotia. Top 10 holdings we see are all Canadian federal bonds, which allows this ETF to be very stable, since the majority of the holdings are backed by the Canadian government. Another key point XBB stated earlier was that it gave broad exposure to the Canadian bond market, which is seen through the exposure breakdowns. Sector allocation yields 70% through provincial and federal allocations, and another 20% to financial, energy, and infrastructure corporate bonds, which isn't surprising since these companies have done very well in Canada over the last few decades. Most of the bonds are AAA, AA, and A graded, which gives the investor confidence that these bonds will not default. So that's pretty much the all-inclusive review of XBB. Bonds may not be as flashy as common stock you see on the news and stock market channels, but they do provide coverage and cash flow for the investor during times of volatility. I believe iShares has nailed all three key points and is designed to be a long-term core holding that investors should consider. Though the returns are lower on an annualized basis than most indices, bonds do provide consistent growth and cash flow that can be compounded into other holdings. The recent pullback of this type of ETF may be considered a decent opportunity when looking back in the future. Locking in a 2.7% yield may be very beneficial when looking to reinvest these distributions. Thanks for watching the XBB review. Make sure to like and subscribe and comment if there's a specific ETF you'd like to be reviewed.